Good morning, everybody. I figured I'll kick this off early. We'll save all the most important stuff for people who are, needing to follow the schedule that we set, but we're 5 minutes early here. But excuse me. As we know, we have GDP, unemployment here in 5 minutes. So I didn't want to, in case there was technical glitches like yesterday or whatever, I didn't want to be starting up the webinar at the moment that news came out. So before we do the real prep, just in case we want to take any trades into the release or post-release, I should say. Quarterly, continuing that bullish destination as we've talked about all week, yearly from prior value. Quarterly doing the same except for its developing value. It's now clearly broken prior. Monthly has accepted beyond prior. I guess it's debatable, depends on your rhythm read. But every other time frame is bullish. We're not going to let the monthly keep us from doing that. Now, as we get over to the weekly and whatnot, it's the same as yesterday. In fact, it's quite literally the same as yesterday. It's an initial breakout from prior value with no pullback yet. It's an imbalance up with no imbalance pullback yet. So if we do pull back into the vicinity of where weekly development value currently is, that's a nice spot, right? I'm now going to be treating this monthly zone at least neutral. Technically, the monthly is bearish. It's at an upper extreme. There's the acceptance picture change there on that time frame is not there yet. Again, gun to my head, do I want to be short or long the monthly? It's short. But if we do pull back on the weekly, that's going to be a very nice spot that's retesting that quarterly level, that monthly area between PVA and DVA almost into that 41 CVA. But into the news, post news here in a couple minutes, minute and a half, I think we could see a really nice correction, right? The market most probably needs to get that pullback to then continue with some form of this bullishness overall that we're seeing across some time frames. So I would not mind doing a little scalping post-release, seeing if I can catch some of the downside if we get that. If it just goes higher, that gets harder and harder to, on the monthly weekly picture, it gets harder and harder to just say, yeah, let's just keep going up in a straight line. Very difficult for the market to do that. All right, 20 seconds. Pretty muted response so far. Shorting some. we'll look to scratch this extremely quickly if it can't drop. What a news release. What a volatility event. Flattened out for now. Momentum long here. Sellers couldn't really do much. Let's see if the buyers can run the highs. Trying to hold within this CVA. It's not a comfortable spot to be long. So if you're just joining the call, I decided to just pop on here real quick and see if we can scalp around the news event, and turned out to be a big dud. Who would have thought that this week that even the GDP release would be a 3-point range event. But anyways, we're still going to do a full prep and all that kind of stuff. I just did a quick and dirty a moment ago. So let's see if we can just run these highs here. Speed of the tape is not fast. There's a little weird little quarter end blip. Scale. Scaled some more. Okay. I'm gonna kind of put a hard stop in there and very near my entry there, and just need this little flag wedgie breakout to persist, or either if it starts to fall back inside that pattern there, we'll be out. So I'm just going to put a hard stop in, and let's go on and talk about our day and markets and all that good stuff. So again, started a little bit early just to be able to be in the flow, ready to go for the 7:30 econ release there. Major dud of a release. I don't know what the news was, what those numbers were, don't care. All I know is that the market's not moving. The market doesn't seem to care. So there you go. But so anyways, welcome back to another day. Hard to believe it's Thursday already. One more day after today. One thing that occurred to me this morning is that you know, a lot of good trading weeks, they have a handful of different types of days in them, right? I understand this week might be more difficult than others, but you have kind of maybe a scratch day. We had that on like Monday or something, right? You have a daily loss limit day. We haven't had that yet. Maybe we do that today. You have a decent winning day. You have a really nice winning day. And then maybe another day where it's like, take it or leave it. It's a little up or a little down, right? That's kind of like what a lot of weeks can look like. And I think that a lot of folks have this preconceived notion about what it would look like being a CPT. And sure, I mean, you know, last intensive we made money every day. It was a big success. There are weeks like that, but there's weeks like this. Most weeks are kind of a blend somewhere in between the two, where it's not as bad as this week from just a lack of opportunity and stuff. Maybe not as good as last intensive, where every day is just minting out great R multiples. Most weeks you get a little bit of both. Some days, and that is what kind of the whole thing around embracing the grind as a trader and really working through that, not getting too high on the high end of things, not getting too low on the low end of things, staying even keeled about you, staying diligent to your work, staying true to your process. Anyways, that's what it's all about. So let's do some analysis. Let's take a look at what this market's up to. Yearly. The yearly is finishing up what we've been talking about, not finishing up, excuse me. It's continuing along what we've been talking about all week, right? Enough said. The quarterly is doing a similar thing. Quarterly is something that's actually bullish. We knew that this level had been above and below quite a bit. We knew it was resistance, and sure enough, I think it played a role in the stall the market had been in and things like that. But as I've said, this level was demoted to not as important as this dynamic. This is what the market's trying to get to. And that's what we're seeing here in a ramp into the close day before yesterday, the uptrend yesterday, the ramp overnight last night. We're getting there. Monthly, this is where we have a differing picture for the big read of the monthly. What do I mean by the big read? Well, what do I mean? We're rotational. Okay, let's be sloppy. Okay, this is a probe to an upper extreme. Okay, that's all it is. What about we're above prior value? What about we're above developing value? Yeah, I get it. Could this market DVA keep coming up, right? And PVA here, and we get something like this? You betcha. Does it make sense to think like that and to potentially even prepare to trade something like that? Actually, yes, it does. But how do you do something like that? That's supposed to be a question mark. How do you do something like that? You get a more holistic, man, the lag on this pen is horrible. You put all these inputs in from various time frames and you get something out, and that is how you can answer this question of, would we feel comfortable being micro with the return pullback of prior value in the monthly read? Come on, Pen. Would we feel comfortable getting long up here, even though this is a horrible, the worst trade location at an upper extreme on the month? Those questions are answered by how you funnel in the holistic picture. So we'll withhold full judgment, but for now we know the yearly and the quarterly are trying to get higher. The monthly is giving us signs we could go imbalanced up. We're not currently imbalanced up. We could accept into prior value, but we're not technically, from a full rhythm perspective, doing that yet. Is it okay to be micro sometimes with a time frame read? The answer is yes, but it depends again on that funnel and what's being spit out there from a full read. Let's go to the weekly. Well, the weekly is really no different than it was yesterday, right? The weekly has broken out clearly from prior value. It is clearly imbalanced up. It's not only imbalanced up, it's in a fast trend. This thing ain't pulling back, right? More normal market movement would have been yesterday to get a pullback somewhere between here and here, right, into this zone. Didn't get it. Overnight, we could have seen a pullback somewhere into here to test this area. Couldn't do it, right? And that's because of kind of these titanic or tectonic plate shifts and breakouts that we're seeing on yearly and quarterly. And there's a lot of participants, big picture, that are like, oh crap. That's my take. The weekly, the longer this continues, let's keep in mind it started here. The longer this continues, the more my internal clock is worried about it, about it just being able to just keep going in a straight line. That's not the way markets operate most of the time, is it? All right, I might peel off a little more of this. This is just a scalp. This is not me trying to position for the entire day. So I'm going to take some more off. I think the monthly +2 is a nice spot to consider. So we'll highlight that just so it shows up on our intraday chart. We'll make it pink, hot pink. Could be a spot. If we get a nice push, could be a good spot. Obviously, where might this market go bigger picture, right? We can pull over the DMI chart. Well, that's quite simple. Where's the market trying to get to? Well, that is right here for the quarter, which is also the monthly point of control. And it's pretty close to the year. What's that year level? 41.25. Oh, well, there you go. That's going to be hot pink. There's your magnet right there. That's major destinations on major time frames. Okay, flat the S&P. Stalling up here, a couple of wicks, trying to roll over. We got our run to new highs. Go back and look at the recording. What did I say was the idea for the trade? I thought the market was in more of a position, and this could be an interesting conversation. You might guys have some questions in the Q&A. I don't know. Are we bullish or bearish the S&P today? Obviously, we're bullish. There's no question about that. There's only one time frame, the monthly. I understand we haven't done structural narrative work yet, and we're going to do that. But do we have a fresh CVA, a most recent CVA that is really dictating directional bias? No, we don't. We're going to, spoiler alert, we're just going to have some neutral areas to watch, which I've already traded against. We're bullish, the S&P today. But let me go back to when I fired up the webinar early and talked about what I thought was most probable, even most needed. And I alluded to it when I talked about the weekly. The market needs to pull back, guys. I know we're bullish, but it needs to pull back. We are trading at the, what, the plus, almost the +3 standard deviation on the weekly right now. These are just places that we can never say something must happen, something will happen, but I can assure you that we might be able to spend some time and some more energy at these elevated levels on the weekly, but it is entirely unsustainable. Markets require fuel, right? Participants provide that fuel that the market requires. You simply run out of humans and bots and capital to continue to fuel a market. At a certain time, people start taking profits, people start shorting it, people start have already bought all that they're going to buy. And what does the market do? It pulls back. Okay. That's why the markets move in these ebbs and flows, is because it's an energy concept. So sorry, I get a little passionate about my energy concept talk. That's why I initially wanted to short with the news, with volatility. Okay, we're extended here. We've had a run up. We could really pull back quite a ways. We could take back this entire overnight run, right? And get back down here towards the 40/40s. I wanted to short that if I got a breakdown post news release. I attempted to do that. It was a momentum entry. That's why you don't see a stop out up here. Think about that. A lot of you guys, the way you trade, you short, you always put the stop a certain distance or above a certain area. And all you're doing is getting short here, stopping out here at the worst spot, and that kind of thing. This is a momentum play. So it either needs to have momentum and go, or we're out, right? We're either right or we're right out. The reverse here, based on what's not happening, based on the imbalance, based on the hold of the structural 77 CVA level. And all I wanted to get was kind of new highs. It kind of faltered here a little bit, thought we might not be able to get it. Let's go ahead and scale, 4 times or so. And let's keep a hard stop somewhere around here. Then we do get the highs. Then I do sense it faltering again, and a couple scales and we're flat. Brandon asked a great question. Man. Yeah, so I made a mistake earlier. We know Brandon is smarter than I am, and he's flexing that today. I don't know what I was thinking there for a moment. Checking the quarterly DVA and the yearly DVA and kind of treating them as separate things. Well, we have a couple more days, Merritt, before you can do that, right? So the yearly and quarterly DVA are the exact same thing. They both started on January 1st, right? Look at the global crosshair. They both started right there. They're the same thing. So sometimes because of the calculations of different timeframes, they can be like slightly different, but they're the same thing. So that's not two mega destinations, as I said earlier in my prep, like an idiot. It's one major destination. It is the major destination that this market is working towards. Thank you for the check. And, you know, this brings me to a good point here. This is why not trading in isolation is good for you, good for me. That's a silly mistake there. It wouldn't impact anything about my trading today or whatever. I was saying, oh, it's a it is the monthly no, it's not. Monthly plus twos here. Yearly, quarterly levels there. Okay. But I could have made a mistake that gave me a wrong read on something. I could have made a mistake, or I could have a data feed problem that's giving me wrong information, right? Like Balance Trader was concerned about yesterday. We figured out it was a ETH versus RTH thing for them. Again, doesn't matter what the issue is, some small problems, some big problems. But if you're I want to say open and accountable, right? If you're sharing, if you're in a transparent setting where you're exchanging information and what you see and things like that, and other people are reciprocating that, and this is why the NADRO community is so important versus just you being on Twitter or whatever, or some other trade chat room. You need to speak the same language. I disagree that you want like some big diversity. Some guys saying, well, I use fib retracements, and some guys saying, well, I use Elliott wave, and some chick saying I trade off of some kind of MACD thing or whatever, and some other person is more traditional market profile, and some other you're NADRO. Can there be value? Maybe if these people are really good, then maybe, and you trust and believe that they're as good as maybe they say they are, then there could be value in saying, oh, look, these different analysis methods were all bullish today, right? I would argue maybe that if you're all bullish that day, it's probably a good time to short it. But what's better, right? That could be a small value add. But if someone says, oh, I think this is a buy, that's meaningless to you. The diversification of styles or whatever for developing traders is not a benefit. It's harmful in more ways than it's helpful. Surrounding yourself with people who use the same tools, maybe in slightly different ways or on slightly different time frames or whatever, like we do within NADRO, that is how you work together. You check each other's work. You keep each other accountable. You understand when someone writes up a review what they tried to do. You can then provide feedback that's actually insightful to them, and they can do the same for you. It's a big deal. Okay, so let's kind of formalize our prep and on the DMI chart and things like that. I feel like I'm ranting a lot today. Okay, so structural level 77, and then 103. This is monthly prior value. You know, we can keep an eye on that. I'm going to remove it for now from the DMI spot. I'd rather, if I'm going to do something for the monthly, I'd rather put kind of like a zone in this area. That's confluent with the quarterly spot. The upper end is where the weekly now is. This is now nothing. That's where the weekly prior and developing was yesterday. Okay, so I understand that the weekly is going to keep getting higher and higher and higher. There's nothing we can do about that. But in terms of static areas, when it gets up higher to where that monthly is, that's a fine place to get long. If we come down really quickly, which probably isn't going to happen, that's a fine place to get long. Really what we could do, it's interesting. So let me just draw it on here real quick, just like scratch work. So monthly prior, come on. Quarterly prior. And then monthly developing. So, I mean, as it stands, a pullback into, again, like I keep saying, the low 40/40s would be ideal, but it's going to take us time on the weekly to get down there. And as we take time, the weekly DVA is not going to be there anymore. This is the unique struggle that I have every day of thinking not only about, okay, here's my prep, here's the DMI, but where might some of these dynamic levels that maybe the public doesn't know is a dynamic level, right? Where might they be by the time we get there? So a lot of times, rather than like drawing this here, I'll put it here, right? Anticipating where it would be by the time we got there, things like that. So really what I'm tempted to do for our DMI here, you know, at a higher level of understanding than the public one that I would put out, is really just understand the bullishness. Maybe put a zone here instead of this level, understanding it's, you know, 3 different levels that comprise this area. I'm going to keep this here just to remind us. But really, it's one of those days where we understand that we're bullish. We could make this a bull zone if we really wanted to, which is good. So we have kind of like a last line in the sand. We do have weekly prior below there, which is still untested. But I'm going to say if we're falling apart that much, then I'm not going to just lean on weekly because things are not looking so good. That's a major reversal at that point, especially if that happens today versus drifting down there gently by next Tuesday, right? Which it wouldn't even be a level there anymore. So kind of a last line in the sand here, but really the vibe today here is let's go with the strength until proven otherwise, then look for a pullback, right? So actually scalp short at some point to then get with the priority trade, which could occur anywhere from 40/50s down to 40/40s, which I guess is not that big of a range. I guess it is maybe for the new crappy volatility we have, this low 30, 40 point days. Yeah, so let me just kind of get that in writing here so we understand. One is cautious, go with this overall strength and bullishness. Did I spell that wrong? Strength. um, then two, big picture pullback. Should have made this all parentheses. Three, main narrative long with essentially the weekly giving that IPB, really, right? To align us with the yearly, the quarterly, the recent structural breaks. Let's take a screenshot. No. Okay, there we go. The screenshot doesn't matter. Okay, let's take a look at the CVA structure. Someone had asked about where this one comes from. 130. January 30th and 31st. It's not the best CVA ever, but that's a very nice looking overall distribution. Wonder if I split off some of that this day here. Probably not. Does look funky down here though. That's much better. Let's see. Yeah, that's probably what I did. So there's our next two higher levels, with the higher one being more recent. This one being fairly trivial, not a major CVA. Sometimes what I'll do, it's kind of cool, just up the transparency, right? So this one will be lighter color relative to that. It's a really cool little thing to do. You know, our most recent one, you can, you know, make it a little darker. It's a cool little visual to just see those different shades to represent, you know, essentially hierarchy, importance of those various. Pretty cool. So I would love to again take the short, but there's no shift in order flow there. There was nothing, you know. Well, now that I actually look at it, there's a little bit of absorption, right? Into the high, but yes, there is. So we reached the high here, and then you see these buyers continue to press with the exact same veracity that they were pressing before, and price is substantially lower. So that was actually a nice turn with an order flow signal that I lazily, I mean, I was prepping, right? I was doing other stuff, but when I lazily glanced at it, didn't see. "12 minutes until the open." Maybe we see a little order flow shift. Maybe this market goes rotational intraday with maybe some form of a general breakdown of this really unimportant CVA 77 to 103. Could be a good short. It's a good short trade location across multiple time frames. Again, short term before we get the real bullishness, medium term, if you will. I'm going to grab a little más café. Un poco más café. BRB. Tengo un poco más de café. Sorry about the improper Spanish there for all you purists. You guys are savages. I can't get away with anything today. I try to use yearly and quarterly development value high. I try to speak a little bit of Spanish. You guys are hard on me. Okay, so order flow dynamic real quick. We saw that absorption. We saw a tiny release of that. And then buyers just back pressing again. So we're almost at 10K. We're at 9K. See what happens. S&P is just that magnet of 10K, just kind of sucking it towards it. Perhaps pushing up into a temporary extreme into the monthly +2. But we're going to have to watch the tape to tell us what's happening from that point, whether we're going with kind of situation 1, continuing to go with strength, situation 2, shorting to take advantage of an overall pullback to get us to even situation 3, which we'd love to get to, but who knows if we get there, right? What else is on the news docket today? Natural gas storage. Janet at 2:45. And then we're into Tokyo. I've never been to Japan. Definitely on the list. Want to go sometime. Technically, I've been to Japan. I had a layover at Narita Airport. So technically, I've been. almost wicked into 10K there. The rhythm of the rotations here pre-market has been into kind of the past couple here, as you can see, into the 1.5. Wouldn't be surprised to see a little more fireworks than that here next couple minutes into the open. Maybe getting to that little first pink area there, maybe some energy around that 10K delta. We'll see. Just thinking through what could be. Okay, 10 seconds. So far, the drift lower, not accompanied by net aggressive selling. Also, so far, not through 10K. Just got long here, the S&P. So I need to turn the fill markers back on. I will do so when I can. Delta pushing through 10K. Scaled a little. Let's turn the fill markers on for you. Crap ton of buying, huh? Let's see this thing capitulate perhaps into this pink area. Or not. At least we're moving. At least we're moving and shaking. I'm flat. Short. See if we can run stops through these lows. Good bit of absorption into that high. Probably going to scratch out of this here pretty quickly. Need to see it just start to work. Want to maintain that energy. Drop it through. Might have to turn these fill markers off so I can see the price action a little better, if you don't mind. Scale some more. And I'm flat. I'm long. That is very weird that we drift back down like that. Given the order flow. And I'm flat. That was unfortunate. Order flow misled me there. So Short, looking for the drop, looking for sellers to slam it. We just struggle to drift down there at all, barely dropping, no sellers behind it. We wick that area and look like we can hold perhaps this now sloppy imbalance up and quickly drop back down again without sellers. Now we see some selling. So that order flow there, did me dirty. Back in the long. Very bull flag type of behavior so far in the open. We're above 10K. Just trying to go with the continued trend until that really tells us it's reversing. And then we'll really start to lean more one-sided on the shorts. Small scale there. Still 19 minutes till B period. It's usually never good when it's when a move happens in one fell swoop of almost like a liquidity vacuum, big order flow push just instantaneously, a lot of times that doesn't bode well for continuation. Starting to keep an eye on RTH VWAP. Yes, even this early in the session. Couple of wicks above it. Let's see if we can actually print a candle through it, or if we continue to be held down by that brand new RTH VWAP. I'll try to scale a little more on any new swing high up into that developing value high. Scratched out right around my entry there. Little squirrely action. Still bull flag type behavior here. Selling is not very prominent on the tape. We are struggling to hold anything through that RTH VWAP. Wouldn't be surprised to see a rapid move higher when we do that. Because overall, what are we looking for? Well, we're cautiously looking for continuation. Our priority at the moment, even though it's number 2 on our list, is to look for the pullback. So what's a really good combo of things that could happen to lead to that would be capitulatory type blow off top, which then starts to reverse. And a lot of times those moves can happen pretty quickly. Again, let's be honest, pretty bad movement. This is similar to yesterday's open, except today is a higher speed of the tape than yesterday. There's more of a frenzy of activity here, but it looks extremely similar in terms of bar-to-bar overlap and lack of clean rotations. Turn the fills on for you real quick, but it's going to be messy just based on how short-term a lot of those decisions and trading both ways were. So it just gets in the way a little bit. Momentum short after the news, reversed to long, flat, long here on the break of this kind of flaggy behavior, little scale, scratch, reversed to short, essentially scratch it all. Reversed to long on the break of this flag here for continuation. Misled. That was a nice stop out right there. And then here we tried to get long once more. Nice scale and a scratch. So really only got hurt once. Obviously, this initial momentum short here didn't work, but we're in pretty good shape here. For as how seemingly messy the morning has been, right? I am going to turn that off again just for my eyes. We're up a little bit on the day, but that's not really important. I'm just kind of narrating and giving you the lay of the land as we go throughout our business. the longer that we hold um, in this pattern, the more closer we get to reading this market is truly rotational for the ETH period. Not really there yet, in my opinion. Haven't really spent enough time or gone deep enough to call it rotational. But as I mentioned, the longer that persists, the closer we get to that. So yeah, we have a bear flag forming within a bull flag. Nice. Similar to what we've seen several days, to me, this order flow is really more of a lack of selling up until, recently. We're starting to see some sellers on this move. But the reason why order flow is so much higher is more so due to lack of selling than true buyers getting massively absorbed. I'm choosing to lay off a bit. Obviously, there's little, like right now, we could consider getting back in the long. But let's face it, this is extremely messy. Let's just zoom in on this 3-minute chart, right? That's as long as we're still in this box here without having done anything really outside it, that's problematic. It's 30 seconds from B period. Okay, shorted a little here. Not even full size yet. And I'm out. Getting back in. All right, we're in full size now. It's not quite the blow off top that we'd love, but it was right at B period changeover. Little capitulation. We've now seen a shift short term in order flow. Sellers trying to take it. Little up thrust pattern. So we need to see us, fall back into that kind of yellow box on the RTH that I drew. We're into that kind of VPOC for the day, which is where VWAP is for the day. Could take a small scale if we struggle for the second time here in the past 30 seconds, to get through. My nose itches. No scale yet. Got almost 2R of open P&L right here, right now. Again, I say that not from a P&L perspective, but from a risk reward perspective of how I dialed in that little reentry on that short. All right, we're spending a lot of time right here. Might have to scale. See if the market's nice to us. If it drops here, it's going to be down at 80, which is a fantastic place to scale. We could squeeze a little more, see if we can get the stop run, but it's going to have to just do it. This is how you make your week. Almost up 5R. And I am going to start piecing out of this thing. Or low on the slower moving profile. Little shift in order flow. I'll take some more off if we pop back into that tight range. If we can hold below that tight RTH session range, we can continue to squeeze more out of this. This market can go so far down without changing anything about the narrative or whatever. We're getting late in the tooth here rotation wise, given the crappy rotation sizes we're dealing with. Buyers not lifting from here. We have a stall into this CVA level, but buyers not really doing anything to scare us out of more of contracts. Okay, I took the rest of the initial scale there. Fills on. There you go. Still in the short. Just took the rest of the initial scale out. Short, stop, re-enter, worked it. You see all the different fills here because I was just getting it in, getting it in, getting in, you know, piecing it a little bit through there. The initial stop, that were, as I said earlier, was not a full size. I was going to do the piecing in right there. We can talk about that in the Q&A a little bit. But that was on very small size. And then I got full size as I called out there. And then you see the scaling there and tried to hang on. You know, obviously I could have waited for it to re-enter that range right there. But we just stalled. Looked like the buyers started to get a little strength there. ultimately they didn't, but I'm still happy with the actions that I took there. So where are we contextually? Why do I like being short here? Well, you want to tell me within this landscape, there's room for this. Okay. Over here, right? That we almost got the 2. There's room for this, or maybe even that, right? Over here, we're in open space. I understand it's a bullish thesis, but we're in open space. We could drift around and do all kinds of things in this area, right? So short-term bearish within more medium to longer term bullish. What was my invalidation level for the scalp? I mean, it was tight, right? The same concept as always. I get in thinking it's a turn for the initial one, got caught up in the excess being created further through the highs. That excess is then there. I don't want to see us start to eat away at that excess again, right? My stop there was roughly 1.5 points, essentially. That's how I was able to be up whatever, 5R total, wherever. I'm not drawing anything. I'm just moving my mouse. Ho! We actually had a quarter end blip in our favor, guys. Wow. Unbelievable. Headed back towards 10K, traversing DVA. Took another scale here. Really time to see some form of counter rotation. It's time to see short-term intraday here. The bulls be able to put together a rotation. Let's see what they can do. We're in the middle of DVA. It's random noise. But from a rhythm perspective and, an order flow release perspective, we've seen something out of sellers here, and it's the buyer's turn, but people might be panicking a little bit here. As the music ends from the large move that started off the lows on Tuesday. It's funny, if you look at kind of hindsight, not hindsight, in hindsight, we were taking some really good trades this week from some really good places. Remember that long we took here in the afternoon? even going back to yesterday, the long from here, right? Wish that would have been right here, right? Wish I would have been trading at 11 p.m. for the real move, which is just stupid in terms of the market moving then instead of when we were trading into the close. But we've been there, right, for some really good spots. And this short here could turn out to be again, when we figure out what the hindsight is, when it's all said and done, when the dust settles, that could be a really good short trade location, which we knew from our NADRO-based narrative prep this morning. What's going on in gold, guys? You guys crushing gold? I've seen Inigo and Lovicenzo, excuse me, Inigo. I always pronounce it wrong. Yeah, it's unfortunate they shook me out of that last scale right there. Would have loved to have saved that one for down here on that next drop. Pick up in volume. We know that because there's more volume bars printing, more, but even the DVA tells us that as all of a sudden it ramps towards current prices. VWAP lifts, right? That's because there's more volume printing, so it's weighting the volume weighted average price higher. So, at this point, this is all the way up here, which we talked about, before the open. Where would that be by the time price got there? So we just have to keep an eye on that, as we're counter trend here, right? This is the trade we wanted, but don't forget step 3 of the day. Let's go pull up the screenshot. One was to cautiously go with the strength. We tried that a few times, but I really wanted to be short. 2, whenever I got the chance to do that, and let's keep in mind, whenever I use the word scalp, typically that means not with narrative or even against narrative. In this case, it just depends on the time frame of the narrative viewed, right? I keep talking about the temporary bearishness to get with the main narrative at 0.3 bullishness. So we're just kind of taking advantage as a short-term trader of a temporary type of thing right now. So we're not going to overstay our welcome in this trade. It is a scalp. It's not a full-on, main narrative trade. So now we see the buyers take over, and let's see what kind of rotation they can put together. And they might could rotate us all the way up to the we're rotational intraday. They could rotate us all the way back up to this upper extreme near the high of day again without blinking. So that could happen. We might even get stopped out on the remainder of this position. How much position do I have left on relative to initial? Not that much, about 20%. All right, one little it's about to get pretty boring. So one little last piece of teaching advice here with this is when you get to this point in a trade where you're in the trade that you want to be from a good trade location, and you're simply waiting for the trade to either fall apart or to reach the key areas that you're looking for to reach. In this case, we're going to see if we can get towards first and foremost weekly developing value. Secondary to that, we will take a look at just reaching the other extreme of ETH development value. We can assess order flow at that point, see what it looks like if the sellers are really losing control of the tape in a big way, stuff like that. But in general, we're just looking for the weekly to pull back closer to value and take what we can get off of this counter trend type play. So anyways, what's really important now is that you're not overthinking things. You're not sitting there staring at the tape, staring at your shortest term tools, trying to figure out anything second by second. Now's the time where you sit back, you relax, you don't focus on the shorter term minutia of what's going on, and you manage a core position with a different process than you manage initial scale outs and stuff like that. And that process should be based on bigger picture themes and tactics rather than all the shorter term stuff. So with that, we'll sign off of the morning stream. Like I said, similar to yesterday, we weren't in a position, but I was like, well, at this point, it's probably going to be boring. There's probably not much we can do. That's the point we've reached in this trade here as well. I'm happy we got a good one for the week, just for an unimportant, point of getting some good trades just because it's the intensive. So it just goes to show, if you bide your time through the tough periods and you don't draw down a bunch of R, it goes back to the conversation we were having the other day about risk reward. And you skew that in your favor and you make that your priority in your trading, boom, you turn the week around. One trade, two trades, you have a nice little week rather than, a mediocre or crappy week. Super important. Control your downside. The upside's going to come from time to time. And that's what we've got here on this trade. So cheers, guys. We will see you for the Q&A at high noon.